and welcome to FountainFX on Thursday the 27th of November, and happy Thanksgiving. I was about to say Valentine's, obviously my mind's somewhere else. Anyway, happy Thanksgiving, and as we can see, Euro US dollars in a downtrend, despite the fact that it's been very range bound for the last few weeks, bouncing up and down, price pushing down. And today it's shown that price has honoured this trend line, and has turned and pushed down. It's created a lower high. Sorry, I was saying lower low, lower high. So you can run a trend line from there to there, and basically keep running with the sell order on this. We could, if we want to, just run a trend line running through here, just to gain confirmation that look, that trend line still has not been broken. But if you are looking now, see we're getting very much a triangulated pattern here. So we could be looking, if you're not in now, the easiest thing is to look for a breakout of this. But very much the short, if you go into the smaller time frame, which we will do, you could see that there was a shorting opportunity of this. Yesterday there was a long opportunity to buy and go long. I did look at the consolidation, and a short opportunity did come up, but it was very, very short-lived. No pun intended. And the reason being was that we had a previous area of resistance here that got broken with this candlestick, and so therefore even with a shorting opportunity we were looking at a target down here of this previous resistance to become support, which it did, and price continued on up. So now we've got the trend line. The trend line's been honoured. Woohoo! Isn't that exciting? So sometimes it's really good when a plan comes together. So trend line's been honoured, and we can look at the fact that trend line gets touched. We then got sideways consolidation, and eventually today, price falls. So from an intraday trading point of view, which is day trading, you could have taken a good few points out of that. So we're going to go down to the 15-minute and look at a bit more in depth as to what's gone on in terms of the trading. We're purely looking at technicals. If you were looking at news, etc., then you could see that this short was actually inspired by news, but the long was basically off a double bottom, and I'm going to go and show you that in the 15-minute chart now. Hang on a minute. Right, so if we see here, this is yesterday morning and early morning Asian session, stuck in this very tight 20-point range. It's just a bit below 20 points, around about 18. Bouncing up and down, not really showing any clear direction, because it's always direction you want. You cannot trade range bound. You can't trade range bound. You get whipped backwards and forwards. You go, oh, I'll buy there. Oh, no, I won't. Oh, I'll buy there again. Oh, no, I won't. Oh, I'll buy there again. Hey, it finally got up to my target. Anyway, so we have a range there, very much tight consolidation, whippy backwards and forwards. We then get a fake out with this big candlestick that happened here, and that's often what the market does. It goes, hey, come on, you want to go long? Guess what? I'm going to take it the other way. See, you didn't see that one coming. Anyway, so this one that was actually shorting, it did actually give a nice confirmation that it wanted to short, and that was off this spinning top here, where price broke through the area of support at the bottom, pushed down lower, actually took out this previous low here as well, so it showed that it wanted to go. And then you've got a nice bullish candlestick here. So it could have been potentially the same effect as what happened here. Turn and reverse and take you out again because it's range bound. However, we then got a spinning top which shows indecision. And the confirmation really of the trade entry was off this particular candlestick here, close of that. In fact, the real confirmation you'd be looking for is the close of the next candlestick here, this hammer, whatever, thingy. There you go. I like to call them thingies. This candlestick here, and the reason I'm saying it's a thingy is because I don't care whether it's a hammer or whatever, it's actually lower than the previous low. So price is closed below, which shows the downward momentum. So we get a confirmation there. So the sell is at the 124.56, and great, it goes 12 points in our favor all the way down to the 124.44, turns and rallies all the way back up. And don't you hate it when it does that? However, it comes back, gives us a second chance to hang in there, but then produces a spinning top at the bottom. So gives a spinning top stroke doji, clear sense of not going to happen. If you're a bit slow, you could have got out of the close of this candlestick here, but typically basically you'd have banked anywhere between 6 and 12 points off that trade, saying it doesn't look like it's going to go. However, walk away for 20 minutes, 15 minutes, whatever, and you get a very nice setup, because look, we've got price that's fallen down, so there's been some momentum, increasing momentum. We then have a pullback and another touch, and this touch is even lighter than the first touch, so it's showing double bottom with some upwards momentum, because we got hardly, it didn't even close down here. Price couldn't get down as far as the 124.44 again. Touched it and turned. It certainly didn't close down here. So we then start to see some momentum, and that momentum breaks above the neckline of the double bottom. Woohoo, we say. So we get the break, and we wait for the pullback, which happens, and that's our entry trigger. The close of this particular candlestick, price came all the way down to the neckline. Thank you very much. I'm now going to buy, and the entry would have been at the 124.61. You'd have been in 3 pip spread, so 124.64, allowing for that, and let price run off to the moon, and you sit there and you plot your trend line and you run it along the bottoms, and you just see how price goes. So you got a nice big candlestick here. You could have said, right, okay, it's gone up, there you go, there's a previous top, it's come back up to its previous area of resistance, I'll take my profit there, and that would have banked you roughly 20 pips, maybe 25 pips if you're lucky, if you really got to the very edge of it. So that's a quick 25 pips in 15 minutes, not bad trading for the day. And then you promptly saw it come back down and thought, maybe I was right, yeah, I got it on the turn. Only to then see it turn and wallop, go in the same direction with a huge amount of momentum. So me being the kind of trader that I am, if I suddenly saw that candlestick, I'd be sitting there with a big grin on my face. Anyway, after that, price starts to chug up all the way up, and eventually you get around about here. You get the break of the trend line, so you can just manage it. You could have shifted your stop all the way up to here, just put it below this low if you wanted to, and sitting there watching that and then turning over, and it's the sort of momentum has declined, so you close it somewhere around about here, the 125, the 125.10, and you then close that. So if you close at the 125.10, you'd have banked around about 50 pips. Close around about the 125, 40 pips. Nice bit of trading, thank you very much. Or bear in mind you've sat there and had to wait for the rest of the day for that to happen. The 25 pips that you made here, very nice, thank you very much, I'm going home. And often that's what day traders look for. They look for the big confirmation. There you go, there's the reversal. You can see with this candlestick here, the pullback, okay, break of the neckline. I'm going with that momentum, I'm buying in here. Oh look, there's the top of resistance, previous resistance here, close of that candlestick. Okay, I'm out basically, thank you very much, I'm in and I'm out. And they've taken that position in this entire move, but they can do that consistently because they're not looking to take the bottom and they're not looking to take the top. They're looking to wait for direction and then trade the momentum of that direction. So there you go, that's an easy clue on how to become a bit more consistent in your trading. Anyway, from a big picture point of view, we've got this area here that came in and broke through the trend line. We then got some sideways consolidation, pulled back up. So this is doing a double top on a bigger picture time frame. Look, you can see the M for McDonald's. No, sorry, the M for a double top. And so it's not about Big Macs or anything like that, although if you get good at this, you might even earn as much as McDonald's, but we shall see. And basically, there you go. So you get the M of McDonald's and clearing, and you could always sit there and say, well, confirmation of this short. Oh dear, I don't like that. I've just done the wrong thing, but it doesn't matter. Let's see. So confirmation of this short is the break of this particular low here, and as you can see here, price pushes down, comes back up, can't even get all the way back up to this particular high, and continues on down. So that would have been the close of this candlestick would have been a very nice entry for short. So you'd have got a nice short just below the 124.90, around about the 124.90, and taken price all the way down. As soon as you've got this sideways consolidation, you've been out, and that's at just below that at the 124.70. So that's 20 pips. So a nice quick 20 pip trade. Then you've got obviously the sideways move. something's pushing up, so that's not too bad. But you could simply put it's pushing down, run a trend line underneath here, break of the trend line. Thank you very much. Let's take another trade south. So that's really how it's working. This is the shorter term trend line running up here. We are actually looking, for those of you that want to make for more confirmation, we're waiting for that to be broken, which it looks like it is at the moment, to then take your short on the euro US dollar. And I've been talking way too much, so I'm going to go home and lie down now. Happy trading. Catch you soon. Bye.